Welcome back to my channel. Today, we're diving deep into a fascinating and rapidly evolving topic that's been transforming Wall Street as we know it. Artificial intelligence. More specifically, we'll explore the rise of algorithmic trading and predictive analytics, and how they're reshaping the financial landscape. But before we do that, do me a quick favor. If you haven't already, hit that subscribe button and ring the notification bell. We got loads of intriguing content coming up that you won't want to miss. Picture this, the New York Stock Exchange, a bustling hub of financial activity. In this fast-paced world, human traders are increasingly being replaced by machines, and lines of code are executing trades faster than the blink of an eye. But how did we get here, and what does the future hold for AI on Wall Street? Stick around as we uncover the thrilling story of AI's ascent in the financial markets. So, what's all the fuss about AI in finance? Well, that all starts with algorithmic trading. Simply put, it's the practice of using computer algorithms to make investment decisions and execute trades. These algorithms are designed to analyze vast amounts of data, identify trends, and react faster than any human trader could. But before we delve deeper, let's first understand why Wall Street is so eager to embrace these AI systems. The importance of AI in finance. The financial world is driven by data, and lots of it. Prices, news, economic indicators, there's no shortage of information affecting the markets. For human traders, staying on top of it all is an insurmountable task. This is where AI steps in, unfazed by the data overload, tirelessly sifting through numbers and news to spot potential opportunities. Benefits of algorithmic trading. The benefits are clear. Algorithmic trading allows for faster and more efficient decision-making. It reduces the emotional aspect of trading, making it less susceptible to fear and greed. Furthermore, it can operate around the clock, reacting to market changes as they happen, not when humans return to work after a night's sleep. The evolution of algorithmic trading. Algorithmic trading has come a long way. Initially, it was used for executing simple orders, but over the years, it's evolved into a sophisticated system. It now includes high-frequency trading, where algorithms process vast amounts of data to make split-second trades. This wouldn't be possible without AI. Types of algorithms. There are various types of algorithms that work on Wall Street. Some look for arbitrage opportunities, others predict price movements, and some manage portfolios. These algorithms are programmed to follow strict rules and adapt to changing market conditions, learning and improving over time. Challenges of algorithmic trading. While algorithmic trading has its merits, it's not without its challenges. The so-called flash crashes, where markets experience extreme volatility in a short period, have been linked to algorithmic trading. These events have raised concerns about the stability and safety of such systems. Predictive analytics in finance. Now, let's talk about predictive analytics, which is closely related to algorithmic trading. Predictive analytics involves using historical data and statistical algorithms to predict future market movements. Think of it as financial crystal ball gazing, but with a scientific approach. Applications of predictive analytics. Predictive analytics isn't just for guessing market trends. It's used for risk management, fraud detection, and customer profiling. The ability to foresee potential issues and opportunities is incredibly valuable in the finance industry. Machine learning in predictive analytics. Within predictive analytics, machine learning plays a pivotal role. Machine learning algorithms can analyze vast data sets, spot patterns that might go unnoticed by humans, and make predictions with high accuracy. They continuously improve as they encounter more data. The role of big data. But predictive analytics wouldn't be possible without big data. The financial world generates an enormous amount of data every day. Machine learning algorithms thrive on this data, using it to make more precise predictions. The more data they have, the better they perform. So, where does this leave us? The rise of algorithmic trading and predictive analytics is revolutionizing Wall Street. It's making trading faster, more efficient, and potentially more profitable. But it's also introducing new challenges and raising questions about market stability and fairness. The future of AI in finance. The future of AI in finance is promising. As technology continues to advance, we can expect even more sophisticated AI systems to emerge. However, it's crucial to strike a balance between innovation and regulation to ensure the stability and integrity of our financial markets. Thank you for joining us on this fascinating journey through the world of AI in Wall Street. If you found this video informative, don't forget to give it a thumbs up and share it with your friends. And of course, if you haven't already, hit that subscribe button and ring the notification bell to stay up to date with our latest content. We'll catch you in the next video. Until then, happy investing. Remember, the world of finance is constantly evolving, and AI is playing a leading role in that evolution. Stay curious and stay informed. We'll see you soon.